And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. This is for Friday, September 6th. And today, as always, we're going to show you where the action is in the broader markets. Quite a not great start to the fourth quarter. We'll take a look at where these indices have closed for the week. We are seeing a number of areas in a downtrend, but before we get into that, let's take a look at some of those headline news that drove price action last week. We did get quite a bit by way of economic data that came in rather weak. That PMI, Purchasing Managers Index, came in below below estimates. That ISM Manufacturing Index, that's a key gauge of factory activity, and it posted its fifth consecutive decline. U.S. job openings fell more than expected in July. And a very notable event that not everyone would be aware of is the fact that the Federal Reserve's Beige Book shows a weakening of economic activity. And this is a survey that the Federal Reserve conducts 8 times a year. And they look very closely at this as a gauge of economic activity. And again, it did come in weak. We did get key July economic data today by way of employment numbers, and it did show a soft 142,000 new jobs in August, below that $160,000 estimate for that jobs number. So net, a lot by way of weak data. In turn, as it started at the beginning of the week, we did see recession fears really re-emerge. So let's take a look at the impact on the broader markets, and we'll take a look at areas that are resisting that downtrend and exhibiting relative outperformance. So from here, we're going to take a look at those broader markets and see where did we close for the week. And here we are, daily price chart of the S&P 500. And what we can see is this relative weakness going into today's week. Employment data, we do have an RSI that is now quite negative. It's down here at 41 on the daily chart. We did close very decisively below this key 50-day simple moving average. That MACD is still up there above that net neutral, but definitely heading toward negative territory. And from here, relative to next possible areas of support, amid potential further deterioration, we will need to use this 5,100 level, and that's going to be that August low. So not looking particularly constructive here. Let's take a look at that Nasdaq. The Nasdaq posted a negative view earlier on the week. This is Tuesday, our first day of last week. And this is when the Nasdaq closed below each of its key moving averages, down below this 21-day. We had a 2-day somewhat of a rally. And then, of course, today's sharp 2.5% decline. We do have that RSI. It did turn negative on Tuesday, and it is now down here at that 37 level. MACD has entered a negative territory below that net neutral. As cited in my MEM Edge report on my Tuesday alert, we did enter a downtrend on that NASDAQ. Now, from here, when you were looking at these broader markets, you will want to now zone in on the larger, longer-term view. This is a weekly chart of the NASDAQ, for instance, and you can see that that RSI is dipping into negative territory down here at 48. Now, we did have a similarly negative period last fall, and you can see going into this is before that early November reversal. So you will want to use this as historical precedent because, as you can see, your MACD did turn negative, but it did not get into negative territory. We would go back to this 22 bear market when we closed below both that 50 and that 200-day. We had that negative RSI. Once we got into negative territory here, it did foretell a lengthier decline. So keeping an eye out on that weekly is going to be really quite helpful and instructive. But for now, we are in a downtrend in the broader markets. From here, let's take a look at those S&P 500 11 sectors. And as always, we're looking at a 2-month daily price chart view, and I've sorted the sectors by relative strength. And this is something we have been seeing over the last 3 or 4 weeks, is a decisive move into these defensive areas of the market. We have REITs, real estate up here at the forefront, consumer staples, utilities, and healthcare. Now, healthcare does have a growth component that is beginning to pull back. It's going to be more in line with those medical products types of stocks. We'll get into this as we look at some of these sub-industry groupings, but it is still relatively outperforming. As we move through, it is a bit unusual, but we are seeing consumer discretionary up here at the forefront. It did fall in line with other growth stocks, down 2.5% today, but it does have stocks similar to Walmart that are going to be a bit more defensive in nature. Now, as we move through, it's certainly of note is the fact that economically sensitive areas of the market are getting naturally hit harder. We're getting these weaker economic data points. This is XLI, industrial ETF, and it was down in line with the markets, but you can see that we now have a negative RSI with that negative MACD crossover on the daily chart. Let's go ahead and move through and take a look, because technology has been down in that lower, weaker quartile, and we are now down below that 200-day simple moving average. This sector was down over 7%. We'll take a quick look at Nvidia as we move through today. That's certainly one of the heavier weights in this sector. But of note is that we did get pretty decent volume here on the selling this week. This is another area, and this is going to be similar for your stocks as well. You will want to take a look at that longer term weekly chart. And again, this is seeing that on tech, that RSI now in negative territory, and below this 200-day or 40-week moving average, and a generally negative bias. Now, again, we did have other periods where we dipped below that 50, but you will want to keep an eye on this 22 period, because there is definite recessionary fears that are out there in the markets. Next week, we do get key CPI and PPI inflation data that could, in fact, be an additional inflection point for these markets. Now, let's go ahead from here and take a look at some of these sub-industry groupings in the broader markets. I use ETFs that are really quite helpful for this. And as you can see, that relative strength indicator in descending order. So up here at the forefront, front and center, is the volatility index. So now we are sitting up here at this 22 level, elevated. Now, I will note that this is that early August recessionary fear spike, and the markets were able to rather quickly recover. We also had problems with Japan and the yen carry forward trade at that time. Now, this move in volatility is a little more orderly, and that's really not what we want to see. These spikes tend to recover more quickly. So we are advancing, continuing to advance with this volatility or fear index at that 22 level. I will want to see it get back down below this 16 level to indicate that confidence is back in the markets. But at this time, we are in a general uptrend on that volatility index. So let's go ahead and take a look. I talked about economically sensitive areas pulling back quite a bit. This is the home builders ETF, and it's actually holding in relatively well. The group was down 4%, and that's less than the S&P 500. So interestingly, we are seeing a little bit, I would not call it vibrancy, but it is holding in relatively well. Now, bank stocks are pulling back. KRE, the regional banking ETF, down 5%. In a weakening economy, economic background, you will see reduced lending activity. So hence these bank stocks will tend to suffer. Software up here at the forefront, IGV down 3.9, a little less than the broader markets. As we move through, look at some of these relative outperformers. I think you may be as surprised as me that we are seeing some software stocks up there at the forefront. We have Oracle and Adobe due to report their earnings next week. So keeping an eye on that. It's counterintuitive given their sensitivity to an economic slowdown, but interestingly, we are seeing names there. So on that Russell 2000, this is going to be another very economically sensitive area, IWM. It was down 5.3%, down below this key 50-day simple moving average, negative RSI, MACD poised to turn negative as well. So moving through, certainly one of the weaker areas, and we talked about this last week. There was an astute comment from one of the viewers last week that we may not see semis come back until 2026. And indeed, because this is a very economically sensitive area of the markets, we had a key company today, Broadcom ABGO, report a weak outlook for sales. They are seeing strong AI related sales, but elsewhere, not so much. So this is SOXX, semiconductor ETF, negative here, negative on that MACD. We never got into positive territory. Big break here on Tuesday as well. And again, we'll take a look at that Nvidia because it certainly was down quite a bit last week, almost 14%. IBB, another area that is going to be often indicative of investor confidence. If the markets are in a strong period, you will see an upward move, but we are down in the biotech groupings, but down 3.5%. There have been periods during 0809 where Vertex and other Amgen did outperform the markets, but net in a downtrend there. Retailers XRT, this is the S&P 500 retail ETF, negative on that MACD and RSI, and down below that 200-day simple moving average. Weak employment often will point to weak consumer spending. Now, from here, I'm going to share with you a couple of views of what else is shaping up in the markets. Now, we're looking at the Nasdaq 100, and this is the viewing the list as a performance. So what I have done here is sorted this list by 1 month performance. Let me make sure that I am quoting this properly. And actually, I'm going to go ahead and resort that because what I did want to share with you were names that were able to, over this past 5-day period, essentially buck that 5.5% decline that we saw in the NASDAQ. And here we are. I talked about some of these software names, and really this would be an exercise for putting together a potential watch list. This is FTNT, a software security name, holding in remarkably well. You wouldn't know what was taking shape elsewhere. I talked about biotechs having a capability to potentially outperform. Gilead sitting up here above its key 10-day simple moving average with positive momentum. Also in that software space, Adobe. And again, they are due to report their earnings. I believe it's next Thursday, and really staying up above these key moving averages with bullish momentum indicators. And Workday, another software name up here at the forefront. I am in no way suggesting that you dip in and buy any of these names, but really this is one of several ways that you can stay on top of where that relative outperformance is. You want to key in on those names that are down less than the broader markets, but they have been strong performers year to date. In other words, they have that earnings momentum, most of them behind them. They have fundamental reasons that they are potentially outperforming. And then likewise from here, you can then segue into some of these these defensive areas. And this is XEL, a utility stock that is hitting a new near-term high. So we do have a couple of utility stocks up here at the forefront as well. Now, from here, I do want to share with you another view of this NASDAQ 100, and this is a relative strength indicator, and we're looking at a 2-month daily price chart view. So again, in that NASDAQ 100 listing, these are the names that are relatively outperforming, and you will see in this case a number of consumer staples. This is KDP, Dr. Pepper up here, just really ignoring what's shaping up elsewhere. And we can also see some of these utility stocks, AEP up here at the forefront, and then you will see some what I can only call outliers. Here's eBay up here above that 10-day simple moving average. But most important here is how quickly you can access and see where those outperformers are. We talked about Workday. DocuSign came out with very strong numbers today, another software stock hitting a near-term high. And then also these more defensive areas up here at the forefront with Kraft Heinz and Pepsi, another utility stock. So moving through, we're going to do the same exercise here with the S&P 500, taking a look relative strength indicator sort on the S&P 500 and take a look. Clorox up here at the forefront. VTR is a senior housing REIT stock that has just really been on a tear. And then as we move through, General Mills, Philip Morris, and other yielding stocks. I talked about Walmart holding in, considered a consumer staple based on their product mix and their high earnings and sales numbers. And last up, I did want to share with you a view of the yield curve. And the reason I'm pointing this out is because we have seen the inverted yield curve actually un-invert. By that, I mean the yield on that 2-year is now at 3.6, and the yield on the 10-year is at 3.7. So we are back at an inflection point where shorter term yields are lower than that higher, longer term 10-year. And this inverted yield curve has historically preceded a recession. So it's one of those areas to keep an eye on. It's certainly something I'll be talking about in my report over the weekend because it can be very significant. Since 1976, it has preceded every recession. So last up, we're going to take a look at dividend aristocrats. And this is a list of stocks that over the past 50 years have increased their dividends. And this is a way that you can get potentially more defensive if you are inclined, and then also perhaps as a hedge. And a lot of the names that we've just been talking about up here at the forefront, Clorox, McCormick, Colgate, and so on. And you can drill down and you'll see that a number of these names are really holding in remarkably well. You'd have to get down pretty far before you got to stocks that are trading below their 50-day simple moving average. So of note is that there is vibrancy taking place, but mostly in those more defensive areas of the market. And last up, before we end this week's show, we're going to take a quick look at Nvidia, that heavyweight tech name where we've seen quite a bit of distribution of late. First up, I do want to go ahead and start with a view here of the daily chart. And I've highlighted that indicator that has shown in the past, certainly this year, this April into May period, and then again, July into the middle part of August. We did see that RSI turn negative on that daily, and then we had that MACD trending downward. This did take place here more recently, last Friday, and then we have seen, of course, more deterioration on pretty heavy volume. Now, we do know that we are in a downtrend. We know those characteristics. You will want to note what to be on the lookout for relative to a downtrend reversal. And I'll very quickly mark this up for you. From there, we will go ahead into a weekly chart. But on that positive side, you will want to see a couple of characteristics. First is get that Nvidia back up above that 50-day simple moving average. You can see on this daily chart, we have that black line up through the red, indicating a new uptrend has materialized, and that RSI is positive as well. And this is something that we experienced back here in mid-August. No need at that time to see the MACD get into positive territory. Quite simply, that MACD crossover signaling a new uptrend coupled with a positive RSI. From here, let's go ahead and take a look at the weekly chart of Nvidia. This, of course, will inform your longer-term view. And we can see going back historically when Nvidia has a longer-term deteriorating or negative period, we will go back to this 2022 bear market on the weekly. That RSI did dip into negative territory in January. And I do recall this quite well. We removed the stock back here in November, but more importantly for that longer term view, we had a little bit of a relief rally in March, but your true, what I can only term death knell, if I may, is that we did then get that MACD going into negative territory following that negative black line down through the red. And then, of course, super high volume characteristics on that weekly. And then, of course, broader market conditions. We are seeing a downtrend in both the Nasdaq and the S&P 500. So here we are now with that RSI dipping into negative territory. We did get that MACD crossover that took place in July and pretty heavy volume. So on this long term, we're not terribly in the negative territory, but certainly seemingly heading there. So we'll continue to keep a close eye on that. You can subscribe to my MEM Edge Report. I am all about staying on top of Nvidia, certainly as a bellwether name in the markets. And I am going to leave it there. I am sitting here in intense heat out here in Los Angeles. I may just jump in the pool and cool off before taking a look at these markets again. But have a great weekend. And if you like what you've seen, go ahead and hit that like button. As always, I welcome any questions that you might have. And as a recap, the broader markets are currently in a downtrend. A defensive stance would serve you well. And next week, you will want to keep an eye on that CPI and PPI inflation data. See you next Friday.